Hi there, welcome to kneppyinvests and welcome to the last final trading day of August. We have about 1 hour left of trading today, this week, this month, not this quarter, but this month. Anyway, a nice day on the ASX today, and we have also seen numerous companies release their results. Now, I did start going through some of the results before 10 a.m., but since 10 a.m., we have just seen many companies release their results. Most of these companies are quite small, non-profitable. For instance, Maggie B Holdings. Not sure if that company is profitable, but Althea Group, Titomic. It's just numerous companies have released their results. In fact, so far, 346 events so far, price-sensitive events since the start of trading today. Not quite as many as yesterday. I have a feeling yesterday was going to be a little bit more busy because we haven't seen as many of the bigger companies, the profitable companies, release their results. Just noticed WT Financial, WTF, have released their results. So I'll have a quick look at that company maybe later tonight when I finished work. So I'm on my lunch break right now. Anyway, so what is the agenda for today's video? We'll go through, actually what I'll do, first of all, I'll talk about a comment someone left on one of my videos the other day in regards to standalone videos. I also talked about that comment in yesterday's video, and I'll continue that going down that route or path in a second. After that, we'll have a look at the ASX today, looking at the best and worst performing sectors, indices, and also companies. And then we'll have a look at some of those companies that have released really intriguing results. We have seen quite a few companies move either higher or lower. In fact, I just can think of a couple of companies, pretty big companies, that are down significantly. And when I say significantly, I'm meaning like 7%, but that's significantly for those companies. And then if I have time, maybe one or two comments. So I'm planning to time this video to about 45 minutes from 2 minutes ago when I started this video. So anyway, let's get to that comment. So this was a comment left a few days ago in regards to me not doing any more standalone videos, and some of the viewers were missing those videos, and you have left quite a few comments in regards to that. A nice diversity of thoughts here. And I do appreciate why some of you do like these standalone videos. Also appreciate why some of you like these ASX daily rundown videos. So my plan moving forward is not to stop doing ASX daily rundown videos. Personally, I love doing these videos. It's helpful to me, and hopefully it's helpful to you. So I won't stop doing these standalone videos. In fact, I have not done one, if that makes sense, for quite a few months, but I do envisage maybe 1 or 2 days here and there I won't do one of these videos unless I do it fairly quickly in the evening, maybe 8 or 9 p.m. So that might happen in 2 weeks. There is a day, Tuesday, I think it's the 10th of September, where I'm going to be quite busy and I might not have time to do one of these videos, but maybe in the evening I will. But I'm also planning to do some standalone videos. Now, I'm not sure how I'm going to do it because these ASX Daily Rundown videos will be released every single trading day. So I might have to release standalone videos like in the morning, or maybe, yeah, in the morning, because even on the weekend, I'm doing answer reply videos and a technical update video as well. So more than likely, any standalone videos will be released in the morning. Now, the reason I'm going down this path is because when I started investing, I was 100% fundamentally driven, didn't really care about technical analysis. Now I'm probably 50-50. And I doubt I'll ever go to 100% technical analysis and 0% fundamental, because in my super fund, I don't want to trade in that. I want to maintain a nice quality or a portfolio of quality companies plus small cap companies that I think can be significantly bigger in the future. And because of that, I want to maintain this fundamental focus. So I would actually say right now, my super fund and my standalone personal investing fund account, whatever you want to call it, it's about 50-50 when I look at the funds. So that's why maybe 50-50 fundamental, 50-50, or well, not 50-50, but 50 fundamental or 50% fundamental, 50% technical. So I do want to do standalone videos moving forward because of my super fund, fundamental analysis will be important. Trying to find those high quality companies and or those small quality companies that could be significantly bigger in the future. So if you want to leave your thoughts in regards to this particular topic, put your thoughts down in the comment section of this video or one of my videos in the future. Okay, let's have a look at the ASX today. A pretty good day on the markets. I'm going to be fairly quickly with the sectors and indices. So really good day for energy, industrials, even real estate, up 0.92%. Not a good day for discretionary, down 0.73%. And I'm assuming healthcare is down because of Ramsey Healthcare. I'm going to have a very quick look at both of these just to see why they are both down. Healthcare, maybe CSL is down as well. I'm assuming it's Ramsey Healthcare. CSL is down a little bit. In fact, Ramsey Healthcare is number 8th, 7th in this list. I thought it was bigger than that. Down 7.82%. They did release results today, and it has disappointed the market. So not a big shock that healthcare is down. And discretionary, what's happening with discretionary? Why is discretionary down? Let's have a look. Wesfarmers and Harvey Norman. Harvey Norman, which is the fifth biggest company in this sector, is down on disappointing results. I'm assuming it's disappointing results because the share price is down 5.8. Maybe it's a trading update, or maybe it's their guidance for financial year 25. Did not have a look at their results. Okay, so let's move on to the indices. Gold's had a good day, up 1.13%. And ASX 20 is up 0.23%. So that's about what we would have expected. I'll have a very quick look at the ASX 20 because I'm going through this fairly quickly. I would assume 13 companies up, 7 down. Or maybe no, we'll go 12 up, 8 down. Went in the wrong direction. 14 up, 6 down. The worst performing companies, we have Wesfarmers, Fortescue, Coles, Woolworths, CSL, REA Group. Some of these companies might have gone ex-dividend. I don't know. We're seeing a lot of companies go ex-dividend, and that's why we will see sometimes share prices of these companies drop in the one day. Dividends aren't free. You do have to pay for it in the terms of capital, the share price. Dividends aren't free. Some people don't realize that. Dividends are not free. You do have to pay for it. And the best performing companies in the ASX 20, Woodside's had a good day. Brambles, Rio Tinto, and Goulman Group all up by over 1%. Okay, let's move on to the best and worst performing companies. I do not have my list. I left it over on my other desk, my work desk. Now, hopefully there won't be any surprises here. Actually, what I'll do first, before I do this, let's have a look at my CommSec watch list, just to see. And here are some of the companies, not all, of the companies that have released results today. And what I'm going to do is rank or list this by percentage change. So Jupiter Mines down 15.71%. Appen, the market didn't like their results, down 14%. Gnosis down 10%. I'm going to skip that one. Dicker Data, market didn't like that, down 8.7%. Ramsey Healthcare, already mentioned there, down 8%. Pioneer Credit, I did have a quick look at those results. Nothing out of the ordinary. I think that's just noise, down 7.4%. And you can see the highest share price for that company was actually 54.5 cents, which was higher than yesterday. So I think it's just noise. BDM is a Burgundy diamond mine. Company I've never looked at before, but I did notice they were profitable, so down 7%. And there's Harvey Norman down 6%. And after that, nothing much. Zet Resolute Mining down 3.3%. But probably the best stories today are the companies that have risen. So let's have a look. Atlas Pearls, up 31.82%. Probably one of my best trades ever, which I haven't yet done a video on. And I had a look at their results and their commentary, and I thought, ooh, not a bad year, but it was just one comment in regards to the pearl market in China from the CEO that made me more interested. Delorean up 29.4%. That's another interesting one. A lot of movement in the share price over the past 2 months. A positive result or positive announcement. Then they released their Appendix for sale. There was a little bit of, I don't know what it was, maybe confusion in regards to how they became operating cash flow positive. And then they released their results today, and I can understand why the share price is up 29%. Resonance Health up 25%. A company I have known for about 10 years. And they're very slowly, very, very slowly growing bigger. It has taken them a long time. Downer, probably one of the biggest companies to make a significant move, up 17.8%. Did not have a look at their results, and I'm assuming either the results beat expectations or their outlook or the trading update were better than expected. So up 17.8, which is quite significant for a company that size, Downer has a market cap. In fact, let's have a look at this. Downer has a market cap of, I'm assuming a few billion at least, 3.8 billion. So in one day, the market cap of this company or the valuation of this company has increased by almost $600 million, maybe even over $600 million. What else do we have here? Metarock. Not surprised that's up. I took a position in this company because I thought it was cheap. And I think the results have made the market realize, hey, wait there, this company is pretty cheap, up 16.7%. Bisalloy Steel's fallen down a fair bit, up 14.8%. One of my favorite companies, IPD Group, not surprised that company is up almost 10%. Then we have Stealth Group, released their results towards closing yesterday. Very interesting trading. There was no trading before they released their results, about 3:30 p.m. And as soon as they released results, share price popped up, and it's popped up again. Might have a look at that company, up 8.7%. And then we get into companies that haven't moved all that much, including Count Plus, Civic, which is another company I own, up 4.6%. And then we're getting companies who have not moved hardly at all. Okay, so I might talk about, no, not might, I will talk about some of these companies. So let's have a look to see if I've missed anything. And we'll start off with the best performing companies on the ASX. We have MC Mining, talked about that company yesterday. And in second place, we have Atlas Pearls. And then third place, Delorean. AFL Legal Group, up 26.9%. Yeah, they did release results. So that's one I sort of missed. But again, it's not the sort of company I actually do like. And then again, the turnover is fairly light. Then there's Residence Health, Nimai Resources, Nicolex, fairly small companies as we go down this list of best performing companies until we get to Downer, up 18.4%. Wiseway Group did release results. I'm pretty sure they released results after 10 a.m. And I don't know why I recognize this company. What time did they release results? 11:18. So the results must have been good. And that's it. Let's have a look by market cap. Oh, TPG Telecom. I did not have that in my list at all, did I? Or did I? I don't remember seeing TPG. Let's have a look by. Yeah, that's horrendous. I did not include TPG. They've had a really good day. Sorry for that exclusion, TPG. That's the whole reason I go through this process. I might miss some companies. Clarity Pharmaceuticals, another really good day for that company, up 9.9%. Bega Cheese did not release results yesterday yet, up 8.47%, 8.37. Croon's had a good day. Mesoblast, Botanics, there's IPD Group, Demerix, Phoenix. I wish it went the other way, but it's up 7.7%. Okay. Let's have a look at the worst performing companies on the ASX. We have Mosaic Brands, and I believe Mosaic Brands is down 28.3% because they are not releasing their financial results. They've delayed it, and I think this is have increased the fear that this company might not make it, that there is problems ahead for Mosaic Brands. So they released an announcement called Timing of Preliminary Financial Report. I actually did not open this up. I'm assuming they just delayed it. See if I'm right. Sometimes assumptions can be pretty bad and wrong. Following its recent second half trading update, Mosaic Brands has determined it would not be in a position to lodge its financial 24 Appendix 4E and audited annual financial report by 31st of August 2024. Yes, they're releasing it by 30th of September 2024. Oh, okay, yeah, that's right. Because they won't release it on time, shares in this company will be suspended. I can definitely understand why the share price is down. I would be selling too. I'll just put that out there. I would be selling too. So completely understand why the share price has completely collapsed for this company. The other thing to note, the market cap of this company is like 5.9 million. The market is already pricing this company is going bankrupt. Beam Communications, they released their results a few days ago. And what else? So Hytera has fallen after yesterday's pop. And there's Appen Group. Numi, they might have released results too. Okay, so let's have a look by market cap. There's Ramsey, Harvey Norman, Dicker Data. Surfcorp probably has gone ex-dividend. I'm calling right now. Surfcorp has gone ex-dividend. I'm not even sure they have a dividend. No, they're going ex-dividend on the 4th of September. I'm not sure why the share price is down. Share price was on a nice little run, so this could be just profit taking. Yeah, I'm calling it profit taking. Yeah, maybe a nice buy the dip situation for ServCop. That shows you I can be wrong sometimes. We're all going to be wrong sometimes. I can't even click on the right tab. And as we go down the list, yeah, there's Burgundy, Diamond Mines, Titomic, Trajan Group released their results. I'm not sure how long ago. Is the yesterday? Pretty sure maybe yesterday. Co-sols have been all up and down all over the place, getting to be good value. There's Money Me down to 11 cents. Been waiting for it to get to 10 cents to maybe to add to my trading position. So it's getting to an interesting point for Money Me. Okay, so let's have a look at some of these companies that have released results today. I have put these into a watch list just so I don't forget. So let's start off. What I'll do is I'll start off with some of the worst performing, and then I'll go to some of the best performing. Did I put TPG in this one? I did put TPG in this one. Okay. Fine enough, when you go to the worst performing, if you just do it here, no, I was wrong. I thought it was, yeah, that was stupid for me. Just don't listen to me right now. I'm just rambling. Jupiter Mines, I'm not going to have a look at the results for this company. I'm just going to have a look at the chart. And the chart looks horrendous. This is an ugly looking chart. Now, the share price is getting to the levels where the share price was going sideways back at the start of 2024, sort of trading in a range between about 16 and we'll say about 19 cents. So it's at 17.5 cents now. So this could be a good time to buy some Jupiter Mines. I'm not sure how much lower it can go, but obviously the market hasn't really liked their results. Now, in saying all that, the volume hasn't been that big today. Hasn't been big, but just shows you that just a few enthusiastic sellers is just enough, is all you need to send the share price down because there's been no buyers. No one has been willing to buy Jupiter. Well, not buy, but has been willing to buy on a market. That's the best way to say it. They've been willing to buy on a limit, and the enthusiasm of the sellers is just enough that they're selling on the market, and those limit buyers are being hit. And that's the way to play this. When there's a little bit more fear in the market, just put in a limit order, see if it gets hit. So put it down a few cents below where it is. So maybe if you're wanting to buy Jupiter Mines today, instead of putting it at 20 cents, put it down at 18 cents. Maybe it's going to be hit. And that's what's happened today because the sellers just are desperate to get out. And have a look. And I'm going to go quickly through some of these results. Now, not all of them. Now, Appen also down 14.4%. Is this one of the results I should go through? Let's have a look. Appen, also mindful of time. So obviously the market hasn't liked it, and I'm a little bit surprised. The results from Appen weren't going to be that good, and everything was down. So revenue's down. I don't know what there was. Was there any table here? Here we go. A little table, financial summary, right at the end. Right at the end. It should be near the start, this table. So revenue down. Everything's down. They've even got revenue excluding Google down. Gross margins about the same, increasing just a bit. So that's one positive. And underlying EBITDA before foreign exchange is actually up, but it's still negative. I'm wondering also if the company did have a trading update. Yep, July 24 trading update. Revenue of 17.6 million in July 2024. Despite a revenue decrease compared to June, underlying cash EBITDA improved to negative 0.3 million. So not yet profitable when it comes to underlying cash EBITDA. There's underlying cash EBITDA before Forex and underlying EBITDA. Okay, so obviously the market has not liked these results. Now, this is a bit of a plaything for traders, and share price has fallen through a support level on high volume. I don't know. I am not even thinking about trading Appen right now. A share price is just all over the place for this company. Who knows? The share price could move into a longer term downtrend. Could move back down to 50 cents from here. I just don't know. So it's Appen. Oh, there was a little thing here. Where was it? No, I thought they said Appen. That says Apple. What if there's an Apple or Appen thing in here? Oh, there we go. Appen shares tumble on revenue slide. These articles can be good because sometimes they tell you if it missed expectations or something like that. And I do have to glance through this fairly quickly. And I can't see anything in regards to analysis saying it missed expectations. Okay, so that's Appen. What else do we have here? Gnosis. I'm going to skip past that one. I'm just going to have a very quick look at the chart. I'm just going to skip that one. Dicker data. I had a very quick look at the numbers here, and it was all negative. But just because it's negative doesn't mean the share price is going to drop, because maybe the market was expecting negative numbers, but obviously not. So gross revenue down 6.3%. These are the half-year results, by the way. Statutory revenue down 23.4%. No, that's wrong. That's numbers, not change. So statutory revenue down 2.1%, EBITDA negative 2.4%, profit before tax negative 6.1%, and NPAT down 5.7%. Now, obviously, either the results missed expectations or the targets or consensus, whatever you want to call it. Maybe also any sort of guidance here for the full year was short of expectations as well. And I can't see any guidance there. Let's just see if Dicker Data is turning up here. I don't know if there's any search function here. I try to find a search function here. There it is. Dicker Data shares drop after lower first half profit. Yeah, well, again, that doesn't mean anything. And there's no mention of analysis there at all. So let's have a look at the chart for Dicker Data. And this is another one where I think it all depends on your view of this company. Is this company high quality? I would struggle to get to that point. So I would consider Dicker Data more of a trading stock than a stock or company you're going to own for or hold for the long term. Now, in saying that, it's done very well if you look at the weekly chart over a long period of time. Yeah, very long period of time, in fact. But it is showing signs of weakness over the past few years, not only on the weekly chart, or not only on the daily chart, but also the weekly chart. And even on the daily chart, we have seen the share price move a fair bit down since the start of 2024. In fact, the share price has dropped about 30%, 20 down $3, about 25%. I would be very wary if the share price falls below $9. I'm going to put a little line there. So $9 has been a little support level for this company, even if you go all the way back to 2023. When the company released their results last year, the share price popped up and it did break out. And I do remember that. Did I trade this? I can't remember. And yeah, the share price went on a nice run, and the share price lasted 6 months. And that is research I have seen. My own research shows that when a company jumps up and breaks out like Dicker Data, the signal lasts for 6 months, maybe as long as 9 months, and then the signal fades away. And this just shows that sometimes it does work. You buy on a breakout, hold it for 6 months, and then sell. But sometimes the breakout can lead to a long-term uptrend in the share price, maybe a few years, 2, 5 years or so. But in this case, it lasted about 6 months, and then from February, share price has fallen away. So $9 is very important for this company. If it falls below $9, that will be fairly bullish. Now on to Ramsey Healthcare. This is a result I did not look at all. Not a company I'm that excited about. Very little growth, if any growth at all, over the last 3 or 4, maybe even 5 years. Ramsey Healthcare shares dive on mixed earnings. That could be anything. What does mixed earnings mean? Oh, here we go. UBS analysis expect Ramsey low activity growth guide to lead to some questions with reimbursement headwinds. Still a problem for the company. Jard analysis noted that Ramsey outlook is pretty subdued, with consensus looking more optimistic. That's fairly significant in itself. So the analysis following this company expected a better outlook for the company than what management are saying in their report. So there we go. Now let's have a quick look at the numbers for Ramsey Healthcare. And note again, I did not have a look at these numbers. So what I'll do is have a look at the financial results, the media release here. And I expect numbers to be flat or down. Revenue's up. That's a good thing. Up 11.3%. We're not looking at constant currency. Maybe we should. Revenue up 7.3%, but then profit's only up 2.4%. Underlying profit up 24.5%. You can't actually look at that. So the real profit probably about 2.4% higher. So yeah, this is probably what I would have thought. Flat to either down a bit. Well, I suppose this is up a bit. I actually didn't say up a bit. So I think I can understand why they say mixed. So the results might have been better than expected, but their outlook is a little bit subdued, as that analysis said. So let's have a look at the chart for Ramsey, and this is negative. Now, I actually did trade this one for a very short period of time in February. When they released their results in February, share price popped up 7.3%. I thought, oh, here we have takeoff for Ramsey Healthcare. It did not last long. So not all breakouts work. Some of them failed. And when they fail, get out. This is what I did with Ramsey Healthcare. Like a month later, got out at about $53, $54. And now the share price is 41. Share price moved into a downtrend and it's kept on falling. So obviously, what I thought, what the market thought back when they released results in February, the market went, no, we don't think this company is fairly valued and we're going to sell. And share price is now down to $41. The lowest share price this company has seen since $41 since 2000, or 10 years, over 10 years ago. This is a 10-year low for Ramsey Healthcare. Now, I'm not sure if you were invested back then, so 2013, 14. This was probably one of the highest quality, well, it was perceived as one of the highest quality companies on the ASX. So you can just see what happens to high quality companies. They sometimes don't remain high quality. In fact, over the past 8 years, this company has struggled to grow. So yeah, this company from, I don't know, when it started to move into an uptrend, probably 2000, for the next 15 years, it went from a share price of $1 to $68. A beautiful wealth winner for shareholders during that period. And sometimes the good times come to an end. And I think for Ramsey Healthcare, it is struggling right now. One, have a look at Pioneer. So according to TradingView, Pioneer credit's only down 0.93%. There you go. This is the problem with some of these companies. They can move a fair bit. Yeah, it's just, yes, don't really need to talk about Pioneer. I think that's all. Actually, no, we'll talk about Harvey Norman, and that's it for the companies that have dropped a fair bit. Very quickly, let's just have a look at this very quickly. Harvey Norman. I'm sure Harvey Norman will be here somewhere. Harvey Norman 4-year profit slides, shared stumble. But again, a lot of retail companies' profits have fallen, but the share price hasn't. So this is probably based off, it's probably moved because lower numbers than expected. And again, maybe the outlook is weaker. The company said it's weaker performance. So obviously the performance was not to expectations. Jarden analysis said the retailer's earnings were in line with market consensus. There you go. And looked like a nice clean result. They noted second half trends were improving. It had good cash flow and there were no surprises. So based off that, why is the share price down? And they also said we had seen some risk in the results, so good outcome. Okay, so that's interesting. So Jarden says a good outcome and they're probably a little bit surprised why the share price is down. Let's have a look, very quick look at their results. Again, another one of these results I did not have a look at, which can be a problem for someone like me who I'm an amateur. If this was my full-time job, I would have looked at these results by now. Maybe not in depth, but definitely would have had a closer look. But I've been busy today. And profit down a fair bit. Revenue down. Profit is back to the levels we saw prior to 2020 almost. Okay, it's all over the place. I don't have enough time to go through it with a fine tooth. Now, one of the things I noticed about Harvey Norman is if you get away from the weekly chart, the daily chart started to look interesting. I was thinking, ooh, Harvey Norman is looking interesting and it has come to an end. The interesting nature of Harvey Norman's chart has come to an end. Look at the weekly chart and I ask you, would you be holding this company for the long term? So the share price of this company has not moved over the last 10 years. It's gone sideways. So all you get from this company, seemingly over the past 10 years, is a nice dividend, and that's about it. This is not the chart of a high-quality company. A chart of a high-quality company goes up in share price over time, and hopefully significantly up in time. But this is, for me, just an income play. Do they have a nice dividend? I'm assuming they have a nice dividend. I'm assuming they have a pretty nice dividend. Let's have a look. Where is it? Dividend yield, 4.46%. It's not that good. Okay, so let's get to the top performers, the best performing companies today. Why is this not changing? There we go. We'll start off I'm going to have a look at the chart for TPG because I'm afraid I'm not going to have enough time. TPG. This one was interesting. So if you look at the weekly chart, it's been a downtrend since they started the new, something happened here. I forget what happened in 2020, but the old chart got wiped away and they've had a new chart since then. I forget what happened, what caused this. Was it a merger with Vodafone or something like that? I forget. Anyway, since then the share price has been a downtrend. And interesting enough, you can see this downtrend, or I betray this downtrend as this sloping down line. It's a pretty good downtrend. It's behaving fairly well. And I've just noticed the share price of TPG is right now is right on that downtrend. Would I consider this a breakout? I would be on the fence right now. I'm on the fence. I'm going to put this into my breakout watch list because it is at a 6-month high. Share price dropped significantly when they released the results in February. My only concern right now is the share price is on that downtrend line. Now, if the share price pulls above that downtrend, that would be signifying that we are seeing a breakout for TPG Telecom. Okay, that's that company. A company called Danaco is Danaco. No, I'm not going to talk about Danaco. It's a company that owns casinos in Vietnam, Cambodia, that sort of place. And at this point in time, no, but might just have a quick look at the chart just to see if it's a breakout. No, okay, let's move on. IPD Group. Okay, this one I will discuss a little bit more. I'm always putting IPD because it just seems natural that IPD Group with a ticker code IPD, but unfortunately Impedimed has a ticker code IPD. Just wish they could change. I had a look at, I'm a shareholder, been a shareholder for this company for a long time. In fact, I bought shares in IPD Group. Where was it? There it is, $1.44, just after they listed on the ASX. And the reason, you might have heard me say, I will not buy into a company that has recently listed unless they release something positive. So IPD Group, on the 7th of February 2022 results, released a positive announcement. Not sure if it was results or maybe it was a trading update, not long after they listed. So I will buy a company who has recently listed if they release a really positive update. And that's what IPD Group back in February 2000, so 2.5 years ago at $1.44. So share price went on a beautiful run, but the share price has been just going sideways. So we're in a consolidation period for IPD Group. I'm not going to sell my shares in this company because the tailwinds behind this company are pretty good and the results bear that out. Now, this company had made a few acquisitions, so keep that in mind as well. So the main thing to focus on here, in my opinion, is, well, revenue growth, that sort of thing, but revenue per share growth, earnings per share growth. They don't include revenue per share growth, but they do include earnings per share. And the results were pretty good. No complaints. So revenue, everything's up by more than 25%. In fact, EBIT's up 46.6%, profit up 44.7%, earnings per share, which is the most important one here, up 30.1% because they would have done a bit of dilution. My only gripe, my only negative thing to say, gross profit margins down by 1.1%. So if I did have to pick this apart, which is a good thing when you do own a company and you do like a company, I think it's very healthy to look at the bear case, look at the things that might be going wrong. And in this case, gross profit margins dropping is a little red flag. But the market doesn't care. Share price up, what was it? 4.93%. Share price has been up and down today. I almost would be calling this a breakout. Share price is almost at a 6-month high. I would need to see the share price remain above $4.90 for me to call this. But anyway, I think the P/E ratio on these results is now like 18, not that stretch for a company that is growing pretty nicely. So that's IPD Group. Stealth Group. Yeah, let's talk about Stealth Group. This is a small company. I don't consider this a quality company. Up 13%. They released their results at 3:40 p.m. I'll have a look, very quick little look at their results. So this company sells stuff. Yes, sell stuff. I'm just going to tell you what they sell. distributor, wholesaler, and retailer of industrial maintenance, repair, and operating supplies, consumer technology products, and other related products and services. So fairly limited margins in what they're doing. So they need to really increase their revenue. Now, this company is also acquisitive. And one of the reasons I like this company is simply because they have a target. They have a revenue target of $300 million at 8% EBITDA margins in 2028. I love it when companies have goals and targets because it gives the employees and the management something to strive for. I think it's very important to do that. Anyway, these results were fine. Again, there's a few things I'm not the biggest fan of this company, and one of those is the margins. The margins of this company are quite small. So in financial year 2024, revenue of 113.7 million, I would have preferred slightly higher growth in revenue, up 2.4%. They also put the 3-year growth, which is interesting. So if they do get to 300 million, I think a lot of that will be through acquisitions. Not all of it, but a lot of it will be through acquisitions. But EBIT up 39.6%, profit before tax up 48%, profit after tax up 50.2% to 1.4 million. So just see right there, the margins of this company are quite small. And the littlest thing that can affect margins can see this company going from being profitable to being loss-making. And Mosaic Brands is seeing that right now. Earnings per share at 1.34 cents. They also had an outlook strong, expectations for revenue, profit, and earnings to outperform financial year 24, with underlying revenue of 159 for financial year 25, up 39%. By the way, this company is quite small and still quite small. SGI, 30 million, 29.43 million. And now the problem with this company, share price has been doing nothing for the last 8, 9, 10 months. And finally, we have seen a little bit of life, but I would like to see the share price of this company get above 28 cents, which would be either a long-term high or all-time high for Stealth Group. And I should mention, not forget, volume has been really good today. Yesterday, before they released their results, there was no volume. There was not one single trade, maybe one. And then as soon as they released results, the volume, everyone started buying. Not everyone, but there were quite a few buyers, and the share price is up. So put this on your watch list, Stealth Group, but it is small and things can go wrong for small companies. Want to have a look at Bisalloy? I think their numbers were down, but we have seen the share price absolutely collapse. This could be just a bounce, but it's on the back of the results. So it's not a breakout. It's not a breakout because share price was significantly higher not that long ago. Metarock. Gonna have to get a move on if I want to finish on time. Metarock up 16.7%. I had a quick look at this. I'm a shareholder, and this is just a value play. This company's cheap. When I say cheap, we're talking about a market cap of 55 to 60 million, 64 million. Oh, the share price is up. Yeah, of course. And this company had now profit from continuing operations of 21.2 million, but they did sell a business, so that has affected their profit. But when you have a look at the numbers for this company, it looks impressive. Not the highest quality company, definitely not. So this company is, they service they do stuff for, used to be for the coal companies. Anyway, doesn't matter what they do. I just thought it was cheap. And yeah, the share price was in a bit of a downtrend. I'm not sure what was happening here. They did release something negative a few weeks ago, but I just think this company is just really good value. And also cash on hand. Did they mention cash on hand here? They have a net cash of 21.8 million. So this company has an enterprise value of about 40 million right now with good profit. Let's just have a look at their, we'll have a very quick look at their pennies 4E. Oh, this is not going to be 45 minutes. I'm already at 39 minutes. Was that no, that's remuneration. So the financial statements come after remuneration. Here we go. So revenue of 294 million, and they had so profits from continuing operations 22.2 million. Then profit before income tax 17.7 million because of finance expenses. So I would assume the profit before income tax or after income tax would have been maybe 13, 14 million. But you add back Profit loss from discontinued operations, 18 million. If you have a look at the cash flow statement, you'll see they did really receive a lot of money from the sale of stuff and the sale of Pibar, 46 million there, and proceeds from sale of property, plant, and equipment, 32 million there. So plenty of cash on hand. So nice results from Metarock, and share price is up. But not a breakout, not a breakout. Share price is only at a 2-month high, maybe even a 1-month high. Okay, let's move on to the next one. Downer. I'm assuming, I'm going to have a look at Capital Brief, and hopefully they can tell me exactly what's happened with Downer. There it is. Shares surge on earnings edge out forecasts. Hopefully analysis is in here, or an analysis. UBS analysis noted that results were slightly ahead of consensus estimates, according to Visible Alpha data, with financial year 24 EBITDA 2% above forecast. So not that much above forecast, but that's all you need. That's all you need for the share price to take up, to go off, to increase by, what was it, 18%. That's all you need. A little bit in guidance, and this is the sort of chart you get. This is pretty much a doozy of a chart. Would I be buying on this? Maybe. Maybe. This could be a sign that the market is now really excited about the next 6 months for this company. So this is definitely one to put on your watch list, in my opinion, because the chart looks pretty good. Share price going sideways for a long period of time. Now it's just popped up. I would have preferred higher volume, but that's okay. So Downer looks pretty good. Not going to have a look at the results because I'm stretched for time. Resonance Health. Oh, should I show you this really quickly? Yes. I did have a very quick look at this because I do have a story. Maybe story is a little bit dramatic. I do have a long history with this company. I've been following them for a while, and I was a shareholder at one point, and then I just got frustrated because they're growing at such a slow rate, and they're sort of profitable. So revenue of 8.6 million, an increase of 4.2 million. So you just see that. They increased their revenue by 4.2 million to 8.6 million. Yet I've been following this company for 10 years. They've been very close on that inflection point of becoming profitable on an ongoing basis. And that's on very low revenue. And yeah, earnings per share of 0.04 cents per share, operating cash flow of 1.39 million. Where's the profit? They just mentioned normalized EBITDA, operating EBITDA, but there's no mention of profit there, just earnings per share. So this company is profitable. And let's have a look at the chart for this one. I don't know. I've not had a look at this chart for a while. So let's have a look. And that's probably why. Not a breakout for Resonance Health. Okay, 2 companies to go. Delorean and Atlas Pearls. Okay, so Delorean up 29.41%. This is going to be a breakout, I have no doubt. Now, one of the things about this company, they released a market update on the 23rd of July, which was received really well by the market. They then released their operating cash, or the cash flow report, pennies 4C, on the 31st of July. I'm going to show you this very quickly. I do think this caused a little bit of confusion, because if you have a look, even in me, if you have a look at this, receipts to customers 11.9 million, operating cash flow positive $4 million, but there was this LGC shortfall charges refund of 4.7 million. You take that away, they're actually operating cash flow negative in this particular quarter. So my biggest question was, is this LGC shortfall charges refund an ongoing thing? Do they receive this every few quarters? Because this looked like a one-off based off this, or every year. So I don't know at this point in time how reliable it's going to be, but I have heard they will be receiving this sort of LGC short fund on an ongoing basis, that sort of thing. But obviously, the market loved these results. So all they released was a preliminary final report, no presentation, no mere release. That is what you get from some of these small companies. They just released their preliminary final report. And it looked pretty good. Do they have a table here? Yes, they have a table right at the end. So revenue up 45%. Profit, 3.4 million, up 134%. That's have 2 profits here. Profit loss for the year after tax, 4.7 million. So they did get a tax benefit, which raised their tax. So diluted earnings per share at 1.84 cents. Share price before today was below 10 cents. So the P/E ratio of this company is quite low based off these results. The question I have is, can they maintain this moving forward? But I am interested in Delorean. So let's have a look at the chart. I'm not sure if I've done a video on this company. Have I done a video on Delorean? There we go. Delorean up 72%, July 23rd. Not a standalone video. So I could do a standalone video on this company, I suppose. And that's a chart. I do like this chart. There we have it. Share price rising when they released that market update. And the share price pulled back and release of the pennies 4C. And a beautiful buy the dip situation. And now the share price is above 10 cents. I might put an order in at 10 cents. And hopefully the share price will pull back. So that's Delorean. And finally, we get to Atlas Pearls. Another company I do know and a company I've traded. Up 27.27%. This is another one. Oh, actually, this company released a fair bit. So Appendix 4E. Let's have a look at the Appendix 4E. Okay, so the numbers look really impressive. Revenue up 53% to 41.7 million. Profit from ordinary activities up 246% to 31.5 million. You might think, well, this company has significant margins. And profit of 31 million. This company has a market cap of 61 million. So trading on 2 times profit. Wow, the cheapest company in the world. Now, have a look at the annual report. They did do a revaluation of something which did have a positive effect on their profit. Now, I'm trying to find, it must have been in the annual report, trying to find a little comment from the CEO I did like, or maybe it was the chairman. Yeah, it must have been the chairman. So this company sells pearls. They grow and sell pearls. I'm going to have to, of course, I won't be able to find it out, but he said the pearl market in China, oh, here it is. It's a third paragraph down, telling how much they sold their pearls for. So a little bit of weakness in the second half from the first half. But he also mentions here the annual average of the price they sell pearls is well above and long-term level. So that is something to be concerned about because usually things return to the mean, usually. But he also mentioned there are indications that the end demand for pearls from China remains strong. That comment in itself, it may not be true, but that comment in itself keeps me intrigued in this company. Because if you go through all the numbers, this company does look cheap if they maintain this sort of performance. And that's a big if. So let's have a look at the chart. So we can see, there's me buying at 5.7 cents in September last year and selling at 20.5 cents on the release of their half-year results. It was that was planned. And I saw the share price really struggling getting below 9 cents. And I was thinking maybe the low has been reached. And I think possibly that is true. And I would almost consider this a quasi breakout. Share price is at least a 3-month high, not a 6-month high, because the share price was significantly higher when they released their half-year results in February. But this could be a new uptrend for Atlas Pearls. But again, it all comes back to the pearl market. If we see the price of pearls fall significantly, that will significantly negatively affect Atlas Pearls. This is just like a mining company. They don't control the price they sell their pearls for. They also mentioned, if I remember correctly, they cultivated a lot of pearls towards the end of the financial year and they haven't sold them. So they might have a lot of pearls. I think that is highlighted in their financial statements as well. Okay, so that's all I got for this video. So 48 minutes long, so a little bit longer than I hoped for, but that's okay. I think you do have to be a little bit flexible. So again, if you do have any thoughts about standalone videos, these ASX daily rundown videos, which one you like or prefer? For me, I do prefer ASX daily rundown videos, but I do see the benefit of doing standalone videos. So maybe I'll do one on Delorean. So anyway, leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.